What's up everybody? Welcome to the Stocks channel. My name is Corey and today we saw a strong reversal day off the lows, closing at resistance yet again on very high volume buying. So was this the reversal day the bulls have been waiting for? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were up 0.6% and we did close right near that resistance level at 416. And intraday, we did break down to new lows and we did start flushing out some of those long positions. Remember, we've been talking about this for a while, that the market was likely trying to break down to a new low so that it could force liquidate some of those long positions that had their stop losses set there. And so far, it looks like that did happen and it did lead to a strong bounce. Remember, if the market cannot get liquidity, it'll go looking for it by breaking down through support levels and force liquidating some long positions. And right now, we did start to look like we're getting a high volume bounce off of those lows. Now, we can't forget that we are in a strong downtrend, and it is a downtrend until it's not. But in every single trend, you are always going to get counter trend rallies. So on a high volume reversal day like this, it is very possible this could have been day one of a counter trend rally. And that means we could get a breakout above 416 and start trending back up to about 428. We should find strong resistance in that zone, so that's the level I would be paying attention to if we do start closing above 416. Now, we can't rule out the possibility this was just a little bit of a dead cat bounce, because you can see the price action was way below the lower Bollinger Band, and anytime that happens, it is an oversold condition that will try to correct itself. So while we do have what could be a reversal day, we do need to see follow through tomorrow, and we do need to start breaking above resistance at 416. If we start running up to resistance at 428 and start getting a bullish breakout above that level, you're looking for the next very strong resistance level at 438. So all of these levels are still lower highs that we could reject off of and continue to go lower to form new lower lows. And we still do have valid price targets at the gap close at 400 and the price target down here right around 393. So don't get fooled by the price action. You need to see follow through and a breakout above 416, and then you can start getting more bullish for a retest of 428. If we get rejected from 416 and you start to see the selling volume picking back up, you're looking for a new low and start heading down towards our price targets to the levels around 400. So it's very important in a volatile market like we're currently in that you watch the price action very closely and make sure you have a trading plan. Only buy at strong support levels or very oversold conditions, and if you're shorting, only short at resistance. Do not bother trying to get whipsawed between resistance and support levels. So we're getting more bullish above 416 and more bearish below 410, and respect the fact that there's still a very strong bear trend on the daily chart. On the Nasdaq 100 triple Qs, we were up 1.67% today, and just like SPY, it looks like we are breaking down to new lows below 318, liquidating some of those long positions, and we did get that reversal day, closing near the high of the day after some high volume buying. So as you can tell, the triple Qs are above resistance at 318, so if we start to see follow through with tomorrow's price action and we can close back above 318, we are more than likely heading up to test resistance right around 334. If we break out above 334, that will be a bullish breakout. And then the next bullish breakout above that will be the next close above 347. So make sure you know these levels between support and resistance, because above 318, it could be a very quick trip back into the 330s. But if we get rejected from that level, it's still a lower high in the grand scheme of a strong bear trend. Remember, all of these moving averages are stacked to the bear side with a lot of bearish momentum. So price action that's forming lower highs is going to be met with lower lows. You need to see bullish price action confirmation to snap the bear trend. We need to see confirmation the bear trend is reversing with bullish price action breaking through resistance and some of these moving averages to start crossing back over to the bull side. Now, if we can't go to a new high and we keep getting rejected at resistance, you're still looking for this price target down here at 303.5 as long as we're below 318. There's a lot of volatility in this market, and that's why these ranges are getting wider and wider. So if we do start breaking down below 318, you're looking for a breakdown below the low at 313, and then looking for that strong support zone right around 303.5. Below the 300s, we can go all the way down to the 280s and 290s, and it will happen very quickly. So if you're getting more bullish, you're looking for follow through above 318, and if you're waiting to get more bearish, you're waiting for a breakdown below 313. In the Dow Jones, we were up 0.32% today, and the Dow Jones did hit our double top price target down here at 326, and by coincidence, it hit it in the exact time we had it drawn out. Remember, I told you when you break down through support that selling usually picks up and we're going to get there quickly, and that's exactly what we saw with a direct hit in both time and price. Now below that price target, we definitely went down a little bit lower and got some more of that liquidity needed for a bounce, and we were just getting way too oversold, trading way below the lower Bollinger Band. So that double top price target now has been satisfied, which might bring buyers back into the market, and we did go up on increasing volume today. So there is a real possibility that today was the reversal day and it's only day one of a bullish bounce. Even though we are still in bear trends, you can only treat this as a counter trend rally until we get a bullish breakout above resistance. So in the Dow Jones, you're looking for a bullish breakout above 333 and then the very strong resistance at 340. And then above 340, you're looking for a retest of the gap zone right around 347. And above that, that will be another bullish breakout. There is a ton of resistance to the upside for the bulls, and they are going against the trend because we do have a bear trend. So we're still looking for a lower high until we get a bullish breakout confirmation. So watch for strong resistance at 333 and 340, and the next support zone breakdown will be below 326 with the next support at 322.6. On the Russell 2000 small caps, we were up 1.05% today, and IWM did bounce off of that support right around 183, but with the strong bear trend and the confirmed bear market, we're more than likely seeing IWM trending down towards 170. Nothing happens in a straight line, and there's no guarantee we cannot see a counter trend before we go any lower. So if we start to continue this bounce, you're looking for strong resistance right around 191.5 and right around 195.7. If we can start getting bullish breakouts, you're getting a lot more bullish above 203 and above 208, but not any sooner than that. This is a very strong downtrend, so you need to respect it and don't get bullish until we can start breaking back above the 200s. To the downside, if we break below support at 183, you're looking for the next target right around 177.6. On the ARKK ETF, we were up 6.37% today, and the ARKK ETF is continuing into a very strong bear market that just continues to get dead cat bounces. The next strong resistance zone will be right around 52, and we're not getting bullish until we can start closing all the way back above 71. So it's just a matter of which resistance levels are you trying to short this ETF because it's in such a strong bear market. So look for a rejection at either 52 or right around 57, or a resistance trendline right around 60. If we do get above 60, that will be a bullish breakout, which means we're more than likely going up there to fill the gap right around 66. But we still have a very strong bear trend and a very prolonged bear market. So continue to expect to see ARKK trending lower, which will be the next bearish breakdown below 47, which could send us all the way down to the price target at $40. On the VIX, we were down 3.17% today, and we did see the VIX getting crushed from the highs that were just above 36.5, and we did close below the high on Friday. So this is definitely looking like a VIX crush day, which goes hand in hand with the possibility that it was a reversal day. Now we can't say for sure because the VIX still does have a bull trend and it's still way above support, and it was getting outside the upper Bollinger Band, so it really is just cooling down. However, if we can get another follow through day and we can see the VIX crushing back down below 30, that could tell us that we've seen at least a local bottom and we could be due for a strong counter trend rally. So if you start to see the VIX crushing below 30, you can get a lot more bullish of a potential local bottom. But again, we're still in a strong downtrend and you still need to be very cautious while the VIX is trading at these elevated levels. On Bitcoin, we're currently down about 0.5%, and Bitcoin is still trading right around 38,000, still in the strong bear trend and still failing to break above 39,000. From here, it looks like a no-brainer that we're retesting support at 37,000, which will be a very strong support zone. If we lose support at 37,000, you're looking for a retest of the lows right around 30,000, and your next bullish breakout will be when we start closing above 42,000. Try not to get bullish unless we can get the bullish breakout because we are in such a strong downtrend. On NVDA stock, we were up 5.32%, and NVIDIA is starting to get another bounce off of this support zone right around 184. And I still think this stock needs to test the breakdown as resistance as 210. So NVIDIA is clearly in a strong bear market ever since it broke down below 210, but it has not retested that level as resistance. So what I favor in this stock is a retest of 210, and if we get rejected at 210, you're looking for a confirmation that we're going lower in this bear market, which could send us all the way down to about 150. However, if we can break above 210, that will be a bullish breakout, but we still have very strong resistance right around 223 and the gap close at 230. And above 230, you're looking for extremely strong resistance at 244. And 244 could just be another lower high before we make another leg lower before earnings. So you're getting more bullish if we can get a breakout above 244, and then above 244, you're looking for the gap close at 258. So by far the most critical resistance right now will be 210. And if we break down below 184, that'll be a new daily low, which means we still do have support at 179. But below that support, it'll likely be a quick trip down to the price target at 150. On Tesla stock, we were up 3.7% today, and Tesla did bounce off of that support zone right around 856 and did close back above 900. So like I said on the indices, this could be a sign of a bullish reversal. However, this still looks like a bear flag, and we're only one day back above 900. If we can get another day back above 900, that should be enough follow through for bullish confirmation. But we really would like to see Tesla getting all the way back above 975, lose this bearish trending and lose the bearish momentum, and then try to build another higher high and higher low to go back into a bull trend. So above 900, you're looking for a resistance at 937 and 975, with downside support levels right around 900 and 856. If we break below 856, that should speed up the selling to retest the lows at 828 and 762. On Apple stock, we were up 0.2% today, and Apple did hold that support zone right around 156, and we did retest the support trend line intraday at 154. We bounced off that level and we closed back over support. Even though we did develop the full bear trend today, the price action is still holding support. So from here, Apple needs to go back up and break through resistance in a hurry to reverse the bear trend, which means we need to see Apple getting back over 162 and then 166. And we'll be a lot more bullish if we can see Apple getting above 168. And that means we'll likely go up there to fill the gap around 174. We need to be bearish while we're forming lower highs and lower lows in the confirmed bear trend. So the next time we break below 156, you're looking for a retest of the low right around 153. And below that, you're looking for a test of the support zone in the 150s. On the financial sector, we were flat on the day, getting way too oversold below the lower Bollinger Band, and we did get the bearish breakdown below that support zone at 35, and we do have the confirmed bear trend. This is horrible news for the S&P 500 to be seeing the financials looking this week, and we really can't get bullish until we get all the way back over the 50 EMA. The industrials were up 0.21% today, still in the bear trend and still with the price action below all the moving averages, so we need to see the bulls starting to push back above the 50 EMA in a hurry. The healthcare sector was down 0.62% today with bearish price action as it continues to develop a bear trend, so it's more than likely going into a deeper correction until we can get back over that 50 EMA. The energy sector was up 1.6% today, bouncing off the 50 EMA as support, but still below the lower high that's right around 77.5. Below 77.5, it's possible it's still going down for another leg lower to finish out the correction, and you can get a lot more bullish if we start breaking out above about 78. So jumping back over to the S&P 500, it's very important to remember that this is a downtrend until it's not, and all downtrends still have countertrend rallies, and we can't completely ignore the possibility that the countertrend rally is starting with today's price action. We saw high volume buyings off of the lows and did an intraday reversal from the low of the day all the way to closing near resistance at the high of the day. Without a doubt, that took a lot of work for the bulls, and that doesn't happen by accident. So if we start to see follow through with tomorrow's price action, you have to remember the possibility that we're getting a strong counter trend rally, which could eventually lead into a bullish breakout in the price action. Remember that every trend eventually comes to an end, and even though we have been in a prolonged bear trend, you can't rule out the possibility if price action is looking bullish that the trend is getting ready to reverse. So watch that level very closely at 428, and if we start to close above that level, you need to start watching the next resistance at 438, and above that we should lose the bear trend, which means we could go back into a higher high and higher low situation. Now be very cautious while we're in the bear trend because it is a downtrend until it's not. So if we continue to break through support levels, don't forget about the price target all the way down there at 393, and yes, we could still go lower than that. That is just the price target for the time being. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank Trade Alerts beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Discord server, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.